So now that you know how important it is for you and your resident relatives, your loved ones in your household, to have underinsurance, let me share with you how to check for underinsurance. When insurance sells you a product, insurance companies, the product that they're selling you is called an insurance policy. So what they do is they send you this book. It's always 50, 60, 70 pages thick. Nobody reads that book. You take that book and you throw it into the drawer. But what also comes with that is one piece of paper, and that's called the dec page. That's the short for declaration page. All you have to do is find your declaration page. And if you can't readily find it, if you have an insurance broker, they'll give it to you. But really what that is, that's the outline of what coverages you have purchased. And it provides what all of your limits are. So generally, the first thing that is listed there is called liability. Liability is your liability coverage. And liability coverage is when somebody sues you. How much will the insurance company pay to resolve that claim? And basically, you're responsible for anything over and above that. Now, what often isn't understood, what comes with every insurance policy is not just that they will pay those policy limits or protect you up to those policy limits is really what they'll do. It comes with a lawyer. Your insurance policy, when you pay your premiums, says that if a claim is made against you, all you have to do is give that claim to your insurance policy, and then they hire a lawyer to represent you. But I often think of them as a wolf in sheep's clothing, because the lawyer is being paid not by you, but by the insurance company. So there's an inherent conflict when an insurance company lawyer is representing the insured, the individual, and the insurance company, because they know the insured, the individual, is a one-time representation. The insurance company is the one who's feeding them cases and cases, and that's what's putting food on their table. So I ask you, who are they looking out and whose best interest are they looking out for? There are ethics with respect to it, and they are supposed to look out for the best interest of the insured and not expose the insured to any personal responsibility. So if the case can be resolved within the policy limits, they have an obligation, the lawyer for the insurance company, to tell the insurance company, you should protect the insured, the individual, from any exposure above the insurance policy limits. However, the insurance company isn't obligated to just listen to the lawyer they hired. They make their own independent decisions. And in a moment, I'll share with you how it's not uncommon for an insurance company to hang out their insureds to dry and expose them to personal responsibility. But going back to your declaration page, that first line is liability, and just know that that line is what you're purchasing to protect your assets. Then there'll be another line. Oftentimes it'll define how much personal injury protection. Every state defines it differently. They may call it no-fault benefits, but these are basically medical benefits or lost wages that may be purchased to protect yourself in the event that you're in a crash or anybody in your car with respect to how much money would be paid. Then there is another line, and maybe 2 or 3 down, because if you purchase health benefits, medical benefits, there may be multiple ways. In some states it's called OBLE coverage, excess PIP, which is called personal injury protection. It's very state specific. But just know that all of that relates to the doctors getting paid in full. It has nothing to do with protecting you. It just makes sure that you can get your medical coverage and doctors get paid. But then ultimately, at the bottom of all that list, there'll be a line that's called underinsurance or supplemental underinsurance or uninsured motorists. Sometimes they'll write it as SUM, UIM. And you'll just recognize that that is the line. And if you look, that is how much you are paying to protect yourself. So I've seen thousands of insurance policies, and these numbers are very, very broad-based. But I would suggest to you that about 10% at most is the cost. If your liability coverage costs $150 to get the equivalent in underinsurance, it may cost you $15, $20. That's generally what I've seen, the ratio. So for the extra 10% to make sure your underinsurance, the amount of insurance that you purchase to protect yourself, matches the liability insurance, the amount of insurance you're paying to protect your own assets, it's worth every penny, because the liability only comes into play if your car is involved or you personally are involved. The underinsurance comes into play anytime you or a resident relative is involved in a crash in anyone's car. So I'm reluctant to call it the opportunity, because nobody wants this opportunity, but the opportunity to collect against your own insurance company is far greater with your underinsurance than your liability coverage. And it's well worth every penny to seek and collect that. Let me talk a moment about liability insurance, because a lot of people are often confused. What is 100, 300, 300 single limit? What is the difference between split insurance coverage or single limit insurance coverage? And it's this. Split insurance coverage, I'll use 100,000/300,000, is defined simply as this: 100,000 per person, 300,000 per event. So no one person can collect more than $100,000. The insurance company will not pay more than $300,000 per event. So it's using simple math. If two people are involved or injured from a crash, that 100, 300 will pay, the insurance company will pay at most $200,000, 100,000 per person. If there's 5 people who are injured, the maximum the insurance company would pay all 5 people is a total of $300,000, and one person, the max anybody can collect is $100,000. I've had scenarios where I've represented 5 people in a vehicle. One person was catastrophically injured, and the other 4 people, they were injured, but not nearly as severe. In that scenario, the catastrophically injured person only recovered the $100,000, and the other 4 people each collected $25,000, because that's all that the 100, 300 was the insurance company would pay, because they would pay a maximum of $300,000, and here they only had to pay $200,000. Moving on to a different type of insurance, people have heard of umbrella insurance. Umbrella insurance sits on top of another insurance policy, so that in the event that first insurance policy is not enough to cover the liability that's caused by the negligent act to protect your assets, some people purchase an umbrella. And the umbrella isn't limited to a certain type of event. For example, car insurance is limited to acts or activities associated with the car. If you own a house and somebody falls at your house, your car insurance does not cover that. You would have separate homeowners insurance. Well, an umbrella insurance sits on top of all of it. It sits on top of car insurance and homeowners insurance, so that in the event that a claim is made and the damages that are caused are greater than your underlying either car insurance policy or homeowner's insurance policy, the umbrella kicks in on top of that. But in addition to the homeowners or car insurance, your umbrella also covers you if you are driving somebody else's car or you're engaged in some activity where somebody gets hurt and they make a claim and it's not associated with either your car or your homeowner's insurance, your umbrella is there to protect you. Umbrella insurance generally is not too expensive because in order to get to the umbrella insurance, they generally have to exhaust either your car insurance or your homeowner's insurance. So I would encourage you to ask how much a umbrella insurance policy is. And very important, your insurance broker or your insurance company isn't going to tell you this. You don't have to buy your umbrella insurance from the same company that also sells your car insurance or your homeowner's insurance. So I would encourage you to shop around. Insurance companies are known for saying, oh, we're giving you a great deal. Give us all three, your homeowner's insurance, your car insurance, and your umbrella, and we'll only charge you $700. But if you got your car insurance and your homeowner's insurance from one insurance company and the umbrella from another, it may cost you a total of only $600. I would just encourage you to shop around, and insurance companies are not in this industry to do you any favors. Insurance companies, as you can tell, I'm not a fan of insurance companies. They will quickly cash your check for your premium, and they will slow pay whenever a claim comes in. That's not what they should do. Most injury lawyers won't tell you this. It's very easy for me and all of my colleagues in the personal injury bar to go out of business. The insurance companies can put me out of business like that, instantly. All they have to do is be fair. But they can't do it. All these insurance companies, what they do is they take advantage of individuals hoping that they will quit, hoping that they won't make that claim, because for every claim that's not made, that's a meritorious claim, that's justified for them to pay, and it's not made, they're making that much more money. It goes right to their bottom line. These insurance companies set up these hurdles intentionally trying to get you to jump over them, and so many people just give up. They just don't want to take on another hurdle and take on another hurdle. That's what a good law firm will help you get over those hurdles, and will actually lift you up and carry you over those hurdles. So it's important to hold these insurance companies accountable. Because what they often do is when meritorious claims come in and they know that they should be paying the full amount of their insurance, they hold back and they hope that you'll give up and you'll quit. And what they do is they dangle out a little bit of money, suggesting that they won't offer any more. But the ones who have the staying power and the ones who will stay in and hold them accountable, those are the ones who ultimately get full compensation. So unfortunately, the battle is long and the battle is hard sometimes. That's why you need the right lawyers on your team who's been there before and have the history of success that it takes to beat these insurance Goliaths.